Good morning, students. Welcome to the subject of financial management, and we are dealing with our fourth unit, that is management of receivables. In that, we are dealing particularly with the scope of management receivables, and here the scopes are. We have already discussed in the previous session the credit policy, the credit analysis for assessing. The third one, determining the size of receivable, and in today's session we'll be discussing about the control of account receivable as scope number 4. Now what is this control of account receivable? It is nothing but monitoring the account receivable. When you want to monitor, that means when you want to have a close control of how the account receivable are to be managed, how they can be monitored, how they can be examined properly, then there are various methods available. Like you can check the collection period, you can have the aging schedule, or you can take up with the collection metrics. Now as far as the collection period measure and aging schedules are concerned, they are considered to be the traditional methods, and the collection metrics, that is the third method, that is considered to be the modern approach. Now what is this collection period measure? How it is used to keep a control or maybe monitoring the account receivables, right? Supposingly, first one is collection period measure. Now this method indicates the speed of collection from the debtors. The calculated collection period is compared. What happens here is that the calculation period is, or collection period is calculated and is compared with the credit terms. That means longer the collection period means that there is a liberal credit policy. For example, if the credit term or credit period is allowed to the debtor for say 30 days, but the actual collection period is 45 days, that means there is a delay of 15 days in the collection period, which may increase. What happens because of this is it may increase the loss due to bad debts, and it may adversely affect the liquidity of the firm also at times. And that is why, though the method may be used, but it has this limitation. So collection period measure is what? Here we are trying to calculate the speed of collection. So if the days to repay the receivables is more, that means the credit policy is liberal, then it will lead to maybe increase in losses due to the receivables converting into bad debts, right? The next method comes up is considered to be the aging method. This method is also known as scheduled method. Now what happens here is that in this method the receivables are classified according to the length of time, right? That is classifies outstanding receivables, that whatever is received, but whatever is outstanding, with what period of time we are going to receive it back, right? There is an example provided in your text, and we are referring the same. As you can see it on page number 204, there is the kind of table that has been used, which has been divided into 3 columns: aging period, right, outstanding amount of receivables, and percentage of receivables. That means how much you have been able to receive. Now aging period is always in the form of days. Suppose here the aging period is say 30 days, right? Outstanding amount of receivables is 2,50,000. That means out of 6 lakhs rupees, 2,50,000 has been received from the debtors by 30 days. That means it has recovered 41.67%. Right? Coming up to the aging period between 31 days to 40 days. As you can see it in the chart, there is 2 lakhs of rupees that has been recovered, and the percentage of receivable now is 33.33%. Again, from 41 to 50 days, there has been recovery of 1 lakh rupees, that is 16.67 has been already received. Right? Over 50 days, that means over the period of 50 days, within 0 to 50 days, there is 50,000 that is being received, right? And that gives the collection period or collection rate of 8.33%, or 33% of receivables has been covered. Now if you sum up the amount of 6 lakhs, right, and if you sum up the amount or the percentage, then it comes to 100%. That means 6 lakhs of rupees have been recovered as 100% receivables at the end of 50 days. right? Suppose now the credit period is established as a policy for say 30 days. It means 58.33 receivables percentage of receivables will be only recovered, and beyond that 41.6% receivables are not in control. That means with this aging period we can come to know that whatever has been received and whatever is the pending receivables, right? So that is how this aging period is being used as one of the technique of monitoring the account receivables. These two methods which we have discussed can be considered as the traditional method. We move on to the third method, that is known as collection method. Now what is collection metrics rather, right? Now it is more or less the technique with which we can come to know the collection pattern, right? Supposingly the collection metrics can be considered as the modern method because it tells us about the modern payment pattern approach, right? So this method provides the pattern of collection associated with the credit sales, which is not possible in the traditional method. What happens here is this method provides the credit sales month wise, right? Supposingly, for example, credit sales in the month of January, how much is collected in the same month and the following month is being calculated. Suppose the credit sales in the month of January is 8 lakhs of rupees, right? And collections are made as follows. Supposingly it is like 20% in January you have been able to cover, 50% in the month of February, and 30% will be covered in the month of March. That means the next following collection methods or patterns can be known. So you know that by 3 months or by the end of March you will be able to recover the 50% of the amount, right? This is how, with the help of these metrics, collection metrics, we can come to know about the collection pattern that has been established by the firm. So what you have to remember here is that it is a collection method or it is a collection pattern method through which we come to know about the credit sales month wise and how the collection will be taken in the following months. That can be known with the help of these three collection techniques, right? So when we talk about the control of account receivables, what is this method all about? It tells us about how the receivables will be recovered and what percentage of receivables will be left over and how they should be collected with the strict credit policy or with the liberal credit policy, right? And in short, it is like a monitoring account receivables of the company. That is why this method or this scope is important, and to create or to function with this scope or to get this thing worked out, there are three methods available, like collection period, aging schedule, and the collection metrics. This is how things can be worked out as far as this scope number 4 is concerned. Alright, we are moving towards the fifth and the last scope of the receivables or management of receivables, or we are talking about the receivable amount, right? Now this scope is about optimum level of receivables. Now what happens here is that optimum credit policy is influenced by credit standards, credit terms, and collection policy and pattern of the firm. Now if the firm follows a liberal credit policy, we all know that it increases its costs like administration cost, bad debt losses, etc. Now its investment in receivable becomes risky because of the defaulting account, right? So the credit policy should maximize the value of the firm. For this method, firm should do the following points or should carry out following things. Supposingly, first one, it should estimate the operating profit. Now operating profit is affected by the bad debt losses, collection cost, and administrative cost. More the cost, less would be the operating profit, right? So that should be estimated first. Next comes up is it should estimate the investment in receivables. For the standard average investment in account receivable, firm should find out the average collection period and measure into the terms of cost. That means for this much amount of account receivable, this is the average collection period and this is the terms of the cost. That means this much will be the cost that will be generated, right? The third way or the third thing that a firm should do is it should estimate the rate of return on investment also. So firm often calculates the rate of return and it is to be compared with the required rate of return. Suppose the rate of return is 8%, but the required rate of return is 10%, then that can be known, and accordingly the speed up in the account receivables can be made. So what we are trying to say here is that, in short, liberal credit policy increases bad debt losses and collection cost and administration cost, etc. When the large amount is invested in account receivables, the firm can definitely not invest that much amount in the other alternative, which is loss of opportunity cost, right? So the liberal credit policy also affects the liquidity position of the firm, as the large amount is invested in the account receivable. But the liberal credit policy increases the sales and profit, that we all know. Then what we need to do? Then we need to find out that optimum level wherein the profitability and liquidity are equal. So this is that level wherein the profitability and the liquidity of the firm comes to the point of interaction, and that level is considered to be amount or optimum level of receivables, right? So firm should formulate such kind of optimum credit policy as to obtain the optimum level of profits by increasing the volume of sales up to a level where the cost of receivable is kept minimum. Means it should try to increase the volume of the sales definitely, but up to that level wherein the other costs are coming to the minimum level. That means the profitability and the liquidity intersect at a point, the level of risk and the cost remains low, and at the same time there is volume in the sales also, right? So that is considered to be the optimum level of receivable. So that is a kind of creating striking a balance between the liberal and strict policy, so that we can equate the profitability and liquidity of the firm. This is how company can take up with different types of functions, different types of activities are undertaken. We can call it scope, we can call it problems, we can call it functions of the account receivables, right? In all, so by this lecture we have finished with the 5 different levels of the we have completed with the 5 different scopes of the management of receivables. We are moving towards the last part of our session, or maybe the unit, and that is considered to be the importance and advantages and the limitations. Alright, so when we are talking about the advantages, it can be also considered as importance, because if that is there, only then we can check so many things. Like we can do the expansion of sales. Why? Because you are ready to take up the credit sales, and credit sales will generate the account receivables, and that is why expansion of sales is possible with the help of this particular method, right? Next is increase in the profit. What happens because of the increase in the sales? Ultimately, you may not be able to create the cash right now, but the credit sales will lead you to have the cash on hand in future. So that will increase the sales, and maybe the total profit of the firm may also increase over a period of time. The third advantage is source of operating cash. That means small and medium sized firms can raise the additional cash through such kind of account receivable. Thus the account receivables provides a continuous source of operating cash to such kind of units, wherein they can get the cash from time to time depending upon the credit sales that they create, right? Fifth one comes up is raising the business firm. So it provides a kind of advantage in advance on operating cash, and it offers a kind of sound practice of raising the business finance for the small and medium scale units, right? The sixth advantage is the relationship between the customers and dealers can be created, because account receivable is some kind of, or credit sales is some kind of facility that is provided to the customers, with which customers feel free and customers feel benefited by getting the sales and the goods right now and paying it later. So account receivable always tries to maintain the relationship with the different types of customers, right? So that is how the advantages may be known. Now if there are advantages, definitely the grey part is there. The coin's other side is also available by the name of limitations of receivables, right? So what happens to that when you take up with the management of receivables, or when you allow the account receivables? First thing, in practice it is very difficult for a business to determine the credit policy, the optimum credit policy, to decide the investment, how much investment in receivables can be made, and to keep the investment in the receivables in the controllable limit. These are the major limitations that they have to suffer. Now, the next thing is, if you are providing with the account receivable, that means you have to undergo with credit sales, and credit sales is risky because the payment of credit sales against the receivables will be made in future by the purchaser of the goods. So, what happens? It involves the risk for the seller, and that is how it becomes the limitation. Coming up to the third one, the cost associated with maintaining receivables, such as say collection cost, opportunity cost, may be very difficult to calculate at times, and it is the cost that is always incurred, and that may rise up also. So that is the third disadvantage. Disadvantage to na kahi shakaye, but limitations is definitely. Next comes up is, sometimes some amount of receivable that cannot be recovered due to inability of the customers to repay back, then these amount will turn up into bad debts, which will be a kind of loss to the firm, right? Fifth one is, working capital is definitely blocked up in the receivables, which results into many times shortage of cash, right? And the sixth one is, receivables are forecasted on the basis of estimated credit sales, which may not prove to be the real figures at the end. So these are some kind of limitations of the receivables, right? So what we have come to an end of this particular chapter, right, wherein we have tried to see that management of receivable is very important component of current assets, and in India it forms about 1/3 of the current assets, mind you. The funds are tied up in the trade debtors, and if proper care is not taken, then it will affect the profitability of the firm definitely. Thus, if an organization can continue to be liberal in its credit policy till the point it reaches where the cost of extending credit exceeds the benefits arising out of the liberal credit terms, that means that much liberal credit terms can be only granted with which it can offer. Beyond that, if the cost of maintaining the credit account receivable exceeds the benefits, then it has to be checked somewhere. But we cannot forget that account receivable is very important component of the current assets, right? So here we are coming up to an end of this unit, as well as your syllabus also. As far as the syllabus is concerned, in the syllabus we have discussed 4 major units. Like it has been with the introduction of working capital in unit number 1, and the working capital management, that we have seen as 2 parts, right? In the second unit we have checked out with inventories, what is inventories, related concept, and then management of inventories. Next thing, or the third unit has come up as cash and management of cash. Again, various aspects related to cash we have dealt in unit number 3, and coming up to the 4th unit, that is what we have completed right today in this session, is management of receivables, right? So here, what is receivables we have seen quite in detail, and then the management, how the firm manages the receivables actually or practically in the company, that is also we have discussed under the various aspects. So here we are coming up to an end of this session also, as well as your syllabus. Please maintain the complete notes for it, so that we can relate it, or we can prepare accordingly for our exams, right? You must have done that. As far as the important points are concerned, please prepare the summary notes, so that you can keep the video lectures before you, and you can keep the textbook before you, so that we can relate the content and you can understand the things in a better way. Everything in text is not to be included. Whatever has been mentioned in the video lectures and the relevant topics, if you go only through those topics is enough, right? At least whatever has been told to you for the self-study, the advantages, disadvantages of the various topics in the various units, that you should go through, so that if any kind of questions being asked in the examination, we can secure good percentage of marks there, and can write the good content there, right? So please prepare yourselves accordingly for this particular subject, and take care of yourselves. Thank you.